Good morning friends, Vladimir here with you, and this is the daily review for 11th of October 2011. Well, let's take a look after a low volume market yesterday and one way of the market against the US dollar after Sarkozy approved the help for the all the banks actually which have serious problems, and they promised they will come with some clear plan to help the banks. Today the volumes are back, and the US traders also are back after a day off yesterday, so it should be very interesting and volatile. Well, we're not I'm not sure it's going to be volatile, but with high volumes market, and the war between the bulls and the bears now will be clear. Well, let's take a look on the charts we might be interesting in today. Let's begin with the Euro New Zealandian. This pair has a clear stiff area here around the 174.50. A close of the 4 hours above with the cross of RSI, the 50 level, should open the gates for the up move till 175.30, 40. That's the area. A stop loss, of course, will have to be placed just below the 20 MA. So this is target 1. Target 2 can stay open and running with the Bollinger Bands, of course, if we have a 4 hours close above the mentioned level. Let's take a look on other interesting pairs to follow. We have the Australian New Zealandian, which has a beginning of continuing divergence here. This is a stiff resistance. I assume we are going to see some retrace here, probably to the 127 area, maybe a little lower to the 126.80 area, and it should continue up. If it does continue higher and makes this divergence continuous, this way actually, right here and here, right, we will look for the 128.40 area for a possible great sell. So stay tuned for that. And of course, as for now, I do believe we're going lower, probably 20, maybe 40 pips, not more. It should be limited, and then if we have another up move with this continuing divergence, 128.40 will be great area to look for the sell. So it's another pair to look for. Euro Pound, if it successfully closes 4-hour chart about the 0.8730, it should take us all the way up again to around the 0.8790 area. So stay tuned for this pair as well. Alternatively, if it does create a bearish candle here with a bearish stochastic cross, right, cross of the moving average, it will take us probably back to the 20 MA or 20 MA here of the Bollinger Band on 4-hour charts, or even lower. So stay tuned for both possible scenarios. If it goes down, then the stop loss will be just above this high. If it goes up with the break, the stop loss has to be placed below this low, which means around the 0.8685, something like that. So that's about Euro Pound. About the Euro Dollar, I believe this pair, if successfully, will make the close above the 136.80. If it will successfully break and stochastic will cross up again, it should take us all the way back to the 137.70 area again. And if this level will be broken, we are going all the way to 138.70. So stay tuned for this, as it might be the last up move for the Euro Dollar, something like that with this continuing divergence, or even deeper with more stronger continuing divergence, which will take us all the way down then. So stay tuned for this pair as well. The pound dollar, same story. If it successfully closes above the 156.90, if we have the close price, it should take us for higher levels to the 157.50, 60, and if this level will be broken, we are going all the way to around the 159 area, which should be around the, well, little lower, as you can see, the upper boundary of this Bollinger Band. So it's going to be very interesting situation, very interesting market. We have the US dollar franc investor style trade, and it looks like we are going for lower lows. Is it going to be one way? Well, let's see. On 4-hour charts we have kind of flag here. A break of this flag should take us lower for our target, which is just right here at 89.30. That's the area. So these are the pairs to follow for today, friends, and I wish you a beautiful day and good luck with your trade. I'll see you again tomorrow. Thank you for your time. Vladimir. Bye bye.